So even though India has been like zero, there are growth in pockets. I would not say there are no growth. There is definitely growth in pockets. But if you change your system when the market is changing, you will definitely make a good amount of money. I think right now we're at 23.5% year to date and growing. Right? We will maybe end around little bit here, little bit there.
So market has given zero.
We're
your
at 23.
Portfolio is still up 20%.
Yeah, 23.5. Yes, as of today.
Wow.
Yes. So that is going well.
So how? How did you do this?
So I told you, right? There are pockets of growth.
So let's say I am an average investor. I have invested in the Nifty 50 index fund. I got 0%.
Yeah.
Whereas you, who have done ABCD, which we will discuss, you have generated 23% return.
Yeah.
Versus my 0%.
Yeah.
So now explain to me what is that ABCD which you are doing, which an average investor is not doing.
So I'll tell you the answer actually lies. You'll know the answer also. Even without me telling you, you'll know the answer.
Okay.
Okay. I'll tell you this just case study statement. Okay. US is creating such a big problem in India. All stocks in India that are related to US are having a problem. If you had to choose one or two sectors in India which are not linked to US at all, what would those sectors be? If you had to just take a guess.
Defense.
Defense, yes. Hospitals.
Hospitals, yes.
Yes. So these are not linked to real estate in India is not linked to
IT,
US.
chemical and all of that are
all linked. So there are
that.
few sectors, right? Now what happens, like just like me, there are a lot of smart guys who know this. It's called sector rotation. So the money starts moving into non-US based sectors, right? So obviously if you are stuck in that mindset that, okay, I'm going to invest in my existing companies and I'm not going to shift my portfolio, you will be stuck with those investing companies.
So basically sector rotation is important.
Yes, we shifted. We realized that this is going to become an issue.
And the reason why an average investor is not able to do this because an average investor is investing in a mutual fund.
Yeah.
Now, as a mutual fund manager, I have 10,000 crores to manage.
Yeah.
Now, it becomes very difficult for a fund manager with 10,000 crores to do this sector rotation as quickly and efficiently as you.
Yes.
Right? Because you're managing your own personal money at a much smaller scale.
Absolutely.
So, this is an advantage that you as an individual investor has over a mutual fund manager who has way more experience than you but is disadvantaged because of having a such large fund to manage.
Absolutely. And I'll tell you there's only one fund that has significantly beat the index. Only one fund that has done really well, which is the Parag Parikh fund. That is why it's become so famous in the last 12 months.
Parag Parikh multi-cap fund.
Multi-cap, flexi-cap fund.
Flexi-cap
only
fund.
for two reasons. One, September 2024, they took an aggressive call and said market is overvalued. We are not seeing comfort anywhere. We are going in cash. Now, what does cash mean? Going into cash as in we are not investing aggressively.
Basically, they sold the stocks and sat on cash.
Now, not losing money in the market is also making money.
Correct.
Right? So, they took an aggressive call. They did well. If you look at Parag Parikh's top holdings, there would be HDFC Bank, nothing to do with US. Airtel, nothing to do with US. So, telecom and banking has nothing to do with US.
Correct.
HDFC Bank is not growing at 40-50% CAGR. It is growing at a decent pace. But they are still, it is not fluctuating also so much, right?
Yeah.
Bharti Airtel has actually grown in the last 1 year. Telecom has nothing to do with US.
Yeah.
And if you see Jio and Airtel, both of them are doing tariff hikes. I think December they have one more tariff hike.
Yeah.
You're paying 100 rupees extra, 50 rupees extra. They're
so
making
they're the
money.
duopoly, monopoly, whatever.
So that's what I said. If I had to look at just sectors of non-US based problems, then I would straight away go to a couple of sectors. One is the hospital sector. Okay, has nothing to do with that. Hospitals and diagnostics and whatever that is, right? You have the telecom sector, beautiful and growing and showing proof of growth. I'm not even saying this out of this, right? We have our cars, EV, automobile entire sector is doing really well and it's continuing to do from the last 12 months. Not like I'm talking right now and it's doing well right now. So last 12 months is doing well. So if you just position yourself in such good sectors, you are bound to make money. Alcohol. What US? Has nothing to do with US. Has everything to do with Goa and other states, right? So that is where you have to start moving your portfolio into.
So and basically, you realize that the geopolitical situation is not great just by following the news, which everybody has access to. And you took a conscious bet that, okay, if I need to protect my money, I cannot be invested in all the sectors. I need to identify those sectors which are going to be unaffected by the geopolitical issues happening in the world. And you identified telecom, you identified defense, alcohol, and hospitality.
And automobiles.
Hospitals and automobiles. So these are the 5 sectors you identified. So that is step number 1. What is next?
So I'll tell you, first things first is a lot of people don't know when to migrate the portfolio, right? So when the fall started in September, October, nobody migrated at that point. Not even me. Even I didn't migrate at that point. But you realize this is going to become a long-term issue. You take whatever loss you have on your portfolio at that point. If it has fallen from September to November, December, around Jan is when we shifted the portfolio into new age stuff. We realized this is going to continue and this guy is constantly doing this. We don't know where this is going to go. We'll come back to this later if it's required. So then we started going deeper into this. So I'll give you an example one by one of how we did things, right? First, earnings is the best answer to everything. It's your report card.
When you mean earnings, you mean profit.
Profit. If a company has grown from last quarter to this quarter, something is there. In this bad market also, if somebody is growing, even better. And if you look at the screener data, when we looked at all of it, very few companies had proper growth. I'm talking about growth above 15-20%. Quarter to quarter growth. Like this quarter to last year's quarter, I grew by 15%.
Basically 1 year only.
One year.
Quarter to this quarter.
I've grown by 15%. Now in this bad market, you're growing by 15%. Good, right? Something is there. I don't know if it's great or not. So we had, like, for example, we looked at pharma, right? In pharma, a lot of people are talking about CDMO, right? A lot of people are talking about CDMO. And US also spoke about pharma tariffs in Jan. But we knew that US is so dependent on India that it's not going to be easily done. Same with IT. Even Indian IT is so dependent on US and they are dependent on us that IT is always exempted from tariff. But IT companies didn't do well. That's a different issue, right? So pharma, we looked at CDMO. There's a thing called Contract Development and Marketing Organization. We looked at this. Now in this, lot of hype was going on in Jan, Feb, March. Okay, so many research reports coming out of this and all of that.
Yeah.
We looked at what company would do well, and there was one company, a Hyderabad-based company. They were at 27,000 crore market cap. Okay, they were a darling of the stock market in 2020, 2021.
As a SEBI-registered research analyst, you cannot take the name.
I cannot take the name. Yeah. So I'll just say that this is a Hyderabad-based CDMO pharma company, 25,000 crore company.
Yeah.
Right. So that company has given 81% return as of today in the last 12 months.
What are you saying?
81%. It's not even a small cap, micro cap company. It's 25,000 crores. Today it's at 45,000, 48,000 crores. So it's quite a big company. So they did CDMO. They were selling earlier.
So I made 0% and this stock gave 81%.
This stock gave 80%. And it was not hidden. Huh? This is not a hidden stock. Everyone knows about this stock and it has been there, but people don't have that guts to take it sometimes.
Right.
You let the company play out. We'll see. Now, okay, maybe it might be a 1 month growth. It was 12 months growth. Now, 12 months growth will only happen if the company is making revenue.
Yeah.
Last 3 quarters, their profit after tax has grown by 200% each. Like 200%, 200%, 200%.
Like every quarter?
Every quarter.
Every 3 months?
Like last 3 months, 200, 200, 200%. Like 30 crores, 60 crores, 90 crores, like 120 crores that way.
What are you saying?
Because there was a change happening. So now, this is not new again. It has been happening for 9 to 12 months. So it is not something hidden or whatever. It was all there. Now, if you go into the company, we need to understand why. So that is where the game comes. And that also the company in their presentation has given why also. So it is all there. It's not some hidden data, right? Conviction people don't have to hold. So there they had given. Earlier what they were doing, they were selling something called ARV to low middle income companies, right? LMIC.
ARV?
So ARV is like some, whatever, their drug or their pharma component that they have, they were selling to low middle income countries, okay, LMIC kind of countries. Now what they did was they shifted that to CDMO, which everyone was talking about. But here they started tying up with the big guys. And they very clearly said the CDMO revenue that we'll get is going to be insane. But it didn't come in the numbers 1 year ago, so nobody cared about it. But one more thing was playing out. So in the balance sheet, their factory, the fixed assets, okay, the capacity that they had went from 2,600 crores to 4,100 crores in 3 years.
So they did a lot of capex.
Huge capex, almost double capex. Okay,
so
2,600 to 4,100.
Bold. They took a bet.
But revenue didn't grow.
Achha.
So, matlab, something is there. So your capex is so much, the revenue has not come in yet. Means you have huge capacity. That means something is brewing. So we went in and checked, is something brewing? We saw that something is brewing. Something might play out. Risk reward is good because the stock was down before. Nobody was looking at it. So we took a bet actually at 25,000 and we still have it right now, right? We took a bet at 25,000. Today it is at 48,000 and we have not sold a single share of that. And I still believe another 2 to 3 quarters definitely might play out. Our analysis might be wrong, but we made enough that even if I'm wrong, I will still make a good amount and walk out. So that is how
because you already doubled your money in the stock.
Already doubled the money, but we don't put more than 10% of our entire portfolio.
That's what I want to ask. The position sizing.
10%.
Even if you have a very strong bet or conviction on a company, you will not put more than 10% of your capital in that stock. Glad you made it till here. If this gave you even one idea to improve your finances, send it to a friend. Helping them might just make you the smartest person in their group chat. And don't miss the full episode on Finance with Sharan. There's a lot more where this came from.